When you hit your 40s, you're standing at a financial crossroads, and the small, seemingly boring decisions you make over the next few years are what will decide if the rest of your life is financially comfortable or constantly stressful. This isn't about getting rich quick, it's about taking back control. It's a tale of two paths, and it starts with your reality. On the surface, your life may look similar to your peers. You might be married with kids, have a mortgage, and are in your peak earning years. And you probably feel the squeeze, the pressure of college tuition getting closer, of aging parents who might need your help, and that quiet, nagging feeling that you should be doing more for retirement. The only difference between a future of comfort and a future of stress is what you decide to do next. Number 1. The wake-up call. The 40s are a weird decade. You're probably making more money than you ever have, but you also feel more financially exposed than ever before. Your fixed costs are at an all-time high. The mortgage, car payments, kids' activities, insurance, all of it. This is the reality for the sandwich generation, caught between the needs of their kids and their parents. It's a decade of peak earnings, but also peak financial responsibility. Maybe one Tuesday night, after the kids are in bed, you do the exact same thing many people do. You log into your retirement account, and you might get that familiar knot in your stomach. The number is way smaller than you'd hoped. Financial experts at places like Fidelity suggest that by 40, you should aim to have about 3 times your annual salary saved for retirement, and that number climbs as you approach 50. So for someone earning $80,000 a year, that's a goal of $240,000 by 40. But the reality for most is very different. Based on Vanguard's How America Saves 2024 report, the median 401k balance for people aged 45 to 54 is just $60,763. Looking at your balance, you might feel like you're totally behind. You feel the weight of the last 20 years you've spent working and the 20 or so years left until you hope to retire. That moment, that feeling of quiet panic, is the fork in the road. One path is just to let things keep going as they are. The other is the path of taking control. Number 2, the path to perpetual stress. On this path, you see the number in your account, feel a wave of anxiety, and then close your laptop. I'll deal with it later, you tell yourself. Things are just too crazy right now. You choose the path of later, which is paved with small, seemingly harmless decisions. First comes lifestyle creep. A few months later, you get a 3% raise. Instead of using it to beef up your savings, you see it as a green light for an upgrade. You convince yourself the family needs a newer, bigger car. The monthly payment is just a couple $100 more. You fall right into the trap of letting your lifestyle inflate with your income, never giving your money a chance to actually build wealth. Next, you casually ignore your debt. You might have a credit card with a $10,000 balance that just won't go away. With the average interest rate for accounts carrying a balance being around 22.3%, that debt becomes a financial wildfire, silently burning through hundreds of your dollars every single month. You pay the minimum, thinking it's manageable, without doing the math on the compounding interest. Then there's the passive approach to investing. Your job offers a 401k with a great match. They'll match 100% of your contributions up to 5% of your salary, but you only put in 3%. You are literally turning down a guaranteed 100% return on that extra 2% of your pay. It's free money, and you're just leaving it on the table. You keep telling yourself you'll bump it up next year, but next year never quite arrives. Finally, you fall for the home equity illusion. You watch your home's value go up and feel wealthy. You start seeing that equity as a piggy bank, even thinking about a home equity line of credit for a kitchen remodel. You're not seeing that using your house like an ATM puts your long-term security at risk for short-term wants. When your money choices are passive, your life choices often follow. You're always too busy to work out or get a checkup. You let friendships fade until your social circle is just the people you work with. You're not making terrible decisions, just average ones. And that, right there, is the most dangerous path of all. Number 3, the path to financial comfort. Now, let's rewind to that same Tuesday night. You see the same disappointing number in your retirement account and feel that same knot in your stomach. But instead of closing your laptop, you open a spreadsheet. You decide to take control. You don't make huge, painful cuts. You just pull a few small, powerful levers. Your first move is to figure out where the money is actually going. For 1 month, you track every dollar your family spends. You might be shocked by what you find. The spending leaks, the forgotten subscriptions, the daily coffees, the mindless online shopping could be costing you almost $400 a month. Plugging those leaks doesn't feel like a sacrifice, it feels like winning. Next, you automate your wealth. You know you can't rely on willpower. First, you call HR and bump up your 401k contribution to the full 5% to get the entire company match. You make sure you're not leaving a single dime of free money behind. Second, with the $400 you found from the spending leaks, you set up 2 automatic transfers. You use half to start aggressively paying down your credit card with the highest interest rate. This is the debt avalanche method. By hitting the highest rate first, you save the most money in the long run. Third, you use the other $200 to open and automatically fund a Roth IRA every single month. But the biggest change you can make is your defense against lifestyle creep. You create a new rule. 50% of every future raise and bonus gets automatically sent to your investments before you even see it. You never miss the money because you never get used to it being in your checking account. This one decision is an incredibly powerful way to fight the urge to spend more just because you earn more. You start applying this thinking to your life too. You recognize that your health is a financial asset. You book the annual physical you've been avoiding and start a simple 30-minute walk every morning. You know that staying healthy is a strategy to reduce one of the biggest retirement expenses, healthcare. You also make time for friends and hobbies because you get that a rich life is more than just a big portfolio. Number 4. Fast forward 20 years, the 2 futures. Let's jump forward 20 years. You're now 65. Depending on the path you chose 2 decades ago, your life couldn't be more different. The first future is full of stress and regret. You might get laid off at 62, around the current average retirement age in the US, and struggle to find another job with the same pay. Losing your income would be like a financial earthquake. Your retirement savings are critically low, nowhere near enough to keep up your lifestyle. You're now having to think about selling the family home, which holds most of your net worth, just to pay for basic expenses. Your health isn't great after years of stress and neglect, and medical bills are starting to add up. Your world feels small, fragile, and full of worry about how you'll make it through the next 10, 20, or even 30 years. This future is a landscape of stress. The other future is one of freedom and choice. You still work, but only because you want to. A small side hustle you started for fun has turned into a fulfilling part-time business. Your automated investments did their job. All those consistent contributions, the power of compounding, and the full employer match grew your nest egg into a serious amount of money. And because you saved in both a pre-tax 401k and a post-tax Roth IRA, you have flexibility in how you take out money to manage your taxes. You're completely debt-free. You're active, healthy, and have a great group of friends and a life with purpose. You aren't worried about a market dip or a surprise medical bill because you built a buffer, a margin of safety between yourself and whatever life throws your way. This future is a landscape of comfort.
The difference between these 2 futures isn't a lottery ticket or some stock market miracle. It was the small, almost boring decisions you made back in your 40s. It was what you did with a 3% raise. It was whether you ignored a credit card bill or attacked it. It was whether you grabbed your full 401k match or left it for someone else. Your 40s are the ultimate fork in the road for 2 big reasons. You likely have 20 to 25 years left for compound growth to work its magic, and you're in your peak earning years. The decisions you make right now have more power and leverage than at any other time in your life. It's not too late. You don't have to choose the path of stress. You can start on the path to comfort today. The journey from financial stress to comfort doesn't start with some giant leap. It starts with one small, intentional step. Track your spending for 1 month. Make one call to HR. Take one walk. These are the small hinges that swing the biggest doors. If this got you thinking, hit that subscribe button because every week we talk about real, actionable steps to build a life of financial freedom.